Mario Minotti, healthcare stocks, as demonstrated by the XLV, which is the ETF that tracks them, have been the best performers over the past 1 year and 5 years, and you expect this to continue. Why is that?
The healthcare sector is really dynamic right now. There's a whole lot of opportunity to invest in. There's been a huge investment with the Affordable Care Act right now that's really, and it's a broad industry because really it encompasses insurance companies, hospital providers, pharmaceutical companies. So we really see it as a defensive sector because we see short-term volatility of potential to rising interest rates in the equity markets. So we are being defensive, and we see that the healthcare sector is not only defensive, but it also has a lot of upside potential, which is attractive to our clients.
And what about biotech? People worried about biotech valuations. Can this drag down the greater healthcare sector?
Biotech is definitely a big player in the healthcare sector, and we're seeing now more than ever, we see a lot of mergers and acquisitions in that space. So there's no doubt about it that it's a player, and it's an area that we have to watch very closely because valuations and multiples are high, but we still see a lot of growth potential there. So we're not really turned away because of multiples, and we really think long-term that there's a lot of opportunity there, and we want our clients to have exposure to that.
Well, in general, how do you invest at the Manati Group?
We invest, our clients, we work with clients all over the country and we help them retire. Their number one concern being, are they going to outlive their money? So when we invest, we pick sectors like this that are attractive, such as healthcare in the market, and that are going to have good expected rates of return, like we've seen so far this year. We invest broadly in that through a sector exposure across the whole sector, whether it's a fund. It depends on the client's risk tolerance and what their objectives are, but if we do not use individual stock exposure, we are broadly diversified in that across that sector.
All right. There's a lot of medical technology stocks, but what about old school technology? Where are you on that?
Technology is certainly a volatile asset because you never really know on the sector where the valuations are, what's going forward. Also, the recession coming off of a bull market, there's been a lot of advance in technology, and we see technology today is a huge player. Technology is in everything, especially healthcare. So we're definitely conscious of it, but we do not specifically invest in the technology sector directly. We feel that technology really is encompassed in a lot of these sectors, such as healthcare. So our clients are getting exposure to companies that are starting up and innovating. They're taking part in that innovation that drives the U.S. economy.
And then finally, what about the energy sector that really dragged down stocks and certainly high yield bonds at the end of 2014? Are you bullish or bearish on that?
We are bearish on the energy sector. That is a timing play that we really do not feel comfortable with our clients because, again, most of our clients are long-term and more focused on retirement rather than speculation. So energy sector is not a sector that we invest in now because we really don't feel that these prices that can really be up and down, especially in the short term, but even potentially in the long term. So that is not an area that we are overweighting any of our clients' portfolios in.
All right. Thanks a lot, Mario.
Thank you, Greg.
And thank you for watching The Street.